20th. I am Benjamin Bry, joined by my good buddy, Jeff Mackey. How are you doing today, Jeff?
I like your little Freudian renaming of the show right at the top there. That's welcome to Ben Bry and Friends. Today's friend is Jeff. I'm doing well, man. Happy first day of spring. Things are springing along. I'm kind of. It's been a crap month. I went to Europe for freaking 2 weeks and came back, and all the prices of all my stocks. It turns out I probably shouldn't have been on vacation at all. It's been a not great month for the long side equity world.
No, it has not. And, it's interesting because, the price of everything's going up now because everyone's reminded how important oil is. It is kind of the building block of our society. And now you're reminded of it when the supply chain gets messed up. Now, let's talk about how this impacts consumers, since you're a consumer guy. What do you think? I can get my guess, but what do you think the implications are going to be for the coming quarters, I guess, on these consumer names?
You're sharp as hell. I'm in the school of dumb it down, and so we could talk wonky about it all day. To me, prices at the pump are everything. It's really the only real macro piece of data that I think kind of impacts consumer spending one-to-one. You can get credit card data, you can get a lot of stuff, but there's no substitute for that kind of punch in the nether regions that you get every time you go to fill up. With all the EVs and everything else, we're still a country that goes and fills our tanks like every 9 days, give or take. And man, when it starts, 25% higher on gas prices over the course of a month is bad. And at least according to the book, the straight up book of how you trade equities, you sell everything that isn't nailed down on the retail side. You can maybe make a case for dollar stores. You can make a case for stores that are going to be closer to where the consumer is going to spend. You can do a little deep discount. But for the most part, even if you're a person who doesn't much look at price stickers, even if you're a guy who, I went to the movies last night, how much did it cost? I don't know. I don't really give a crap, but I filled up my car after I got back from my trip, and I realized that it cost me 30 extra bucks because I didn't fill up before I left. I noticed that. That's a problem. That impacts your spending. It's the inflation everywhere else. You can kind of bury it, and it becomes a monthly budget thing. And it's like, what the hell's going on with my monthly budget? But that's a day-long thing. When every week you go to fill up your tank and it's a 25% hit or 20%, or, it's a significant kind of meaningful number out in California where we both live, it's about $100. You can get to that $100 line, and I don't care how rich you are, you notice the fact that it cost you a C note just to fill up your damn car. And I don't care what, how much money you have, that impacts your spending. That impacts whether you go get a Diet Coke. It just kind of makes you want to tighten the belt a little bit. And it just reminds you again that things aren't great shakes. And so the book says sell consumer stocks. If you look at the XRT, it's the worst month since last year, our own self-inflicted wounds with the tariff crisis. But, and that's also kind of your best analog. I made a chart of gas prices versus the XRT over the course of the month. It looks exactly like you think, it's upward and to the right on gas prices and downward to the right on consumer stocks. But, you end up with a lot of quarters that don't matter. FedEx came out, their quarter didn't matter. Williams-Sonoma continues for the last year. Yeah. They got the double whammy of tariffs and then this, no matter what they do, it's the best run company that hasn't gone anywhere as a stock that you're going to find kind of anywhere. I mean, I think Laura is just a brilliant CEO. I think Lululemon should hire her, but man, you feel bad for her. She's a wildly competent person that has to just get on calls and explain how the macro situation seems like it's just unbelievably crappy, and they're still posting comps. Well, the part that people hear is that the macro situation is super crappy, and they kind of ignore the comps part. And so good quarters don't matter. Bad quarters, it depends on the company, but for the most part, the answer is just sell these stocks. You sell rips and kind of you don't buy dips. I'm trying to stay optimistic. Typically in over a 6-month spectrum, these crises, these whether they're global, whether they're self-inflicted tariff stuff, it's a buying opportunity. The most bullish analog is that we're kind of halfway to 3/4 of the way through a similar shock to what we saw last year, where retail stocks dropped about 15-16% over the course of a month. And if you bought Liberation Day, which wasn't good news, it was just news. It was just, here are the tariffs, they absolutely suck. The stocks went parabolic 3 days later. If you would have bought kind of that Liberation Day Rose Garden event that Trump held and announced that tariffs were just preposterous, if you would have bought Liberation Day +4, You had a 40% trade over the next 3 months, just as the world digested the news. Similar with oil, it's going to compress margins. It's going to hit consumers. It's hard to see a scenario right now where the prices retreat, but I think it's more rate of change. I think it's more that shock factor that figures to hit spending. Has it shown up so far? Not really yet. Not Bank of America came out today. They said credit card spending still strong, but the jury's out, and I'm inclined to believe prices at the pump more than I am Bank of America's credit card data for the last month. I mean, there's a lingering effect. This is just a flat out tax, and it's a margin compressing tax. So it's a comprehensive, the entire business chain gets it smoked on shit like this. And so, I'm expecting the earnings calls. 3 months ago, it was how are you using AI. The next month, earnings calls will be all about how are you hedging your energy expense. And the answer is, I don't know. How the hell do you hedge something that you didn't expect to go up 25% and all of a sudden everything's going higher? It's by cutting jobs, by doing less. I don't know, by shipping fewer. And some of this stuff until you get the Strait of Hormuz moving. It's all deeper dive analysis, but for the most part, I think it plays out according to Hoyle, which is your safest bet. Like Five Below was great, cheap stuff at a discount that people need. The dollar stores, even though, are getting sold off. And so early is the same as dead in these stocks. We mentioned Williams Sonoma before. That went up 6% this week on good news. It's down 15% for the month. So early equals wrong. And, congratulations on your reprieve. Lululemon, same thing, where it's like, they've got their own problems that are unique to them, but it's just really, I'm trying to stay optimistic, but that involves more making a list of things that I would like to buy lower rather than putting any capital to risk. I'm still sitting around in cash. And as usual, you never have enough cash when you're just hiding in cash.
Yeah, I mean, I've said that numerous times to people, is that it's just not a great time for trading in general. I actually made an app on the Perplexity computer that enumerates it, and it gives you a score and says, should I be trading, yes or no? Today was a big no, a big red no. And I think that's the right answer, is that looking at stuff of like, hey, where do I want to buy this, and really think about it and be like, hey, when things abate, it's, I'm looking at the XLY chart right now. Talk about an ugly looking chart, right?
I mean, just grim, right? And for reasons that are totally understandable. It's like this is we always talk about kind of the call that brokers made, which is old school. Brokers don't call anyone anymore. But it's hey, prices at the pump are up 25%. How do you feel about these retailers here? And it's like, get me the hell out of Dodge so fast I can't even stand it. And that's it doesn't matter what it is. Any kind of marginal dollar just doesn't get spent in the stores for sure.
Yeah, I mean, and so I'm trying to think. When was the last? Do you remember? I guess let's go back to 22 for a second.
Yeah.
How because that was an energy shock. Now, the one thing I'd say about that is, remember, NGDP was growing at 10% plus. That inflation was ripping through. People had savings. Right now it feels like maybe the consumer's been 4 years now of these like price resets, which some people had stocks and stuff did great. The people who didn't, I think it's getting long in the tooth. And then you have the K-shaped economy thing that's been accelerated by AI. I just think about it like it's so easy to be negative. So how do you like go through that and be like, hey, in 08, some of the consumer names bottomed well before the market did, right? Because it's easy in these scenarios of high energy prices, weak consumer, weak financials to be very negative. Like, what do you look for, I guess, when you think about shopping, rather than just maybe the market capitulating, just from a consumer stock standpoint?
I'm looking for stuff that's been beaten down already, and I'm looking for stocks that are just kind of holding their uptrend, not doing great, but just not absolutely collapsing. A Target over a Walmart, for instance. Target is at 13 times sales. No one expects earnings to be worth a shit this year, and they're right. They won't be, but there's enough low-hanging fruit there that this was not going to be a huge year for them anyway. It's going to be harder to justify a high multiple in these, especially more discretionary names, than it is to work a longer term turnaround. So, for the most part, Walmart needs a pretty robust consumer at 35%. Like if their comps turn negative through no real fault of their own, it's going to be a problem. They sell a lot of gas. They sell to a deep discount customer, so they can probably offset it. But I'm just looking for, right now you play it according to the book. You look at Casey's General Stores, you look at I think the dollar stores are a buy on the dip, and you just kind of steer clear. Nike reports next week. I can't think of a damn reason on earth that I would want to be long that, other than everyone hates it and it's at 52-week lows, but that's not enough for me here. Because it's just going to be, execution doesn't really matter. If you look at, names like the shoe names, I mean, Deck had a nice pop, and that just kind of fizzled a little bit. You're not going to get a ton of follow through. And again, it's a time to do less, which people don't like to hear on shows like this. It's always great to come on and have 50 great trades. But if you look at the great traders, they typically are doing a lot less. The truth is that if you're a perma anything, you're probably not going to optimize your returns. But being a perma bear has historically been the crappiest of all the bets. And so I'm trying to find names that no one really expects stuff from, and looking for dips on them. Companies that I like would be like an IMAX. I was looking at Callaway Golf today. It's a simple fundamental story. Our old friends, they finally got Top Golf out of there. They're focusing on actual golf clubs. Is that going to be a great business? No, but taking share that is just an axe fight between TaylorMade, Titleist, and Callaway all the time for market share. I think Callaway can take market share if they're able to get their new product. I love the fact that they're actually making golf clubs as opposed to running restaurant driving ranges. That, as we've talked about for the last year and a half, has been the switch you made. The stock has had a decent run, but I love that coming back. I like IMAX here for that matter. I think people are underrating the resiliency of movies in general. Not AMC, for God's sake, get out of that. But the only answer for the theater industry is going to be better theaters and a better viewing experience, because there is no substitute for going to a movie. It's just in terms of at the premium end. So IMAX is sort of well positioned. That stock has been on a screamer. Come back to me. I'm looking for, my wish list includes names that I want to come back to me, and cheaper plays that kind of work for the longer term, a mix of just that kind of basket. And so fundamental stories, again, that are going to be a little more resilient, a little more kind of, even in a bad market, people will go to the movies if you have a big IMAX experience, and they continue to kind of benefit from that build out from the dying chains. The truth is, as chains go, I don't want to be long the movie theaters, but I kind of like the IMAX story. So, I'm getting interested in names like that are a little obscure, out of favor. They can come back to me, and, those are the type of things that you get 30% discounts on at the capitulatory ends of these moves. And you can make a dump truck full of money. I mean, think of Victoria's Secrets last year into Liberation Day. That stock started the year at 40, went to 14, and ended the year
I actually bought that.
40.
Remember, I bought that 15, 16. Everyone's like, what the hell are you doing? And I was like, look, when you have these dislocations, buying the garbage is actually what we want. All right, there we go.
Yeah, there's Bob.
Morning, Bob.
Morning.
How are we doing today?
I didn't see we were starting early this morning.
Yeah, that's okay. We were just talking about consumer, which we were talking a little bit about energy, because now our boy Bob, who is a bit of a, no one wanted to talk about energy for the first 2 years, the Wall Street beats. Now he's like our hottest guy. So, let's finish off, Jeff, with basically you came on my other podcast, and we talked about how in November the consumer was left for dead, and basically we were buying Deck and I bought Target, and it was easy to hate that stuff, and they both had nice runs and they're hanging in here. So I think that's just instructive of, like, don't get too negative, and also be aware of what's going on. Like, can they cut margins? Can AI help them? I think that's probably for consumer one of the things that you really want to focus on is, like, how much cost savings, how much inventory management, these kind of things can be saved that can overrun, what Bob's going to talk about in a second, which is energy running us all over right now.
Right. And that's going to really kind of what Bob's going to talk about, I assume, is going to expedite the rate of change there. Target, we mentioned them before, and I don't want to mention them as the only stock, but they have kind of the lowest hanging fruit. Walmart's been doing it all along. Amazon's been doing it all along. You have essentially automated supply chain at this point, and you're just turning your stores into distribution centers with minimal touches by actual employees. Because, where is that kind of AI robotics type of thing working already? Restocking shelves, getting stuff from Amazon point A to point B. You can order a product and no one touches it between the last person on the assembly line to the guy who drops on your front porch. And, that's a pretty remarkable sort of situation for them in terms of distribution. And that's going to speed up. So the chains that actually have the cash to deploy it, that takes you out of a Kohl's and into a Target where they still have some disposable income. And that's how they're going to answer this, is they're going to say, you know what? We're laying people off. We're getting rid of we have way too many workers. We've been way too nice in the case of Target for too long. It's time to say screw it to Minneapolis, screw it to these employees that we've been keeping around just because we're legacy nice people. And, we got to get serious and tighten our belts, and that will improve margins. Will that work this year? Nothing's going to work this year, baby, because gas is going up 25% damn week. Until that stops, the rate of change is just going to be a murder thresher for everything in terms of your incremental spend, which brings it to Bob.
Yeah, so that's a good segue, Bob. How are we doing today?
Yeah, oil's sort of steady here. I don't think anybody wants to sell it going into the weekend because you never know what's going to happen over the weekend. But you've got the Trump administration pulling every lever they can to try and ease the supply concerns with what's going on with Iran and in the Middle East, from release of strategic petroleum reserves to easing sanctions on 140 million barrels of Iranian crude oil that sits on the ocean right now. And so I think, and they're trying to still bring together a coalition to work together to open up the Strait of Hormuz, although that's still going very slowly. And people are skittish about moving cargoes or anything through the strait for fear that some stray missile could hit them, and you never know what rogue, terrorist
or a super concentrated drone strike. I mean, Iran is kind of behaving rationally. Like it was in no one's kind of list of things that could happen that Iran would not roll over and they would do smart things. I mean, it's the Strait of Hormuz is a real problem. Hitting the energy grid is kind of, that makes sense strategically if you're a completely outgunned militarily.
Yep. And so some of the debate going on this morning is, everything that's going on, has oil hit a ceiling? And I don't necessarily think you can argue that, because I think really what it comes down to is what capability does Iran still have to cause chaos or to disrupt anything going through the Strait of Hormuz, or to continue to attack their neighbors or Israel, anybody in the region. And I think that's really part of the issue, because now I think the U.S. and Israel is playing a little bit of a game of whack-a-mole, because they've hit the easy big targets that you can see that are there. But with the number of people that are in Iran trying to find who is now shooting drones off from their garage in some little location you don't know exists, you didn't know was out there, how many of those are there that they can continue to attack and cause chaos? And they've indicated that they don't want to talk about a truce or give in here. And there's been no regime change. I think even though Israel's arguing that the war is ahead of schedule, there's been no regime change. And, unfortunately, I think it was yesterday, they publicly executed a star wrestler for speaking out against the regime. So they're publicly displaying that they're still in control and still instilling fear into any uprising or anybody that may try to overthrow the government. They're using AI to show videos that they're actually attacking our battleships and buildings in Israel and Abu Dhabi and around. And so there's still fear in the people about really what's going on here. Are they going to be able to overthrow? Is there going to be some regime change? And that's still a big question. It hasn't happened. And I don't know if it does happen, because we don't see any real roots of that right now. Again, publicly executing a star wrestler just means that, they've still got the upper hand. That regime has still got the upper hand. So again, I think right now it's a question of what capability does Iran still have to continue to target the things that they've been shooting at or sending drones and missiles to, and can, the U.S. and Israel and maybe some allies, Japan or somebody, get the Strait of Hormuz open. And I don't know that that's clear. I don't think that happens anytime soon. And again, remember, this regime that's in charge of Iran right now, these are religious zealots. They don't want to give up. This is a holy war to them. And there's still a chance of this scorched earth. It's a tail risk, but there's still a chance that they go out with scorched earth policy of saying, if we're going down, we're taking everybody and everything down with us. I think that's a tail risk, but it's something that's out there. And so in the meantime, oil's going to hang up here. I don't see oil easing significantly anytime soon. We're going to be up here around $95 a barrel. I've said over the past week and a half that wherever oil was, I'd take the over versus the under. At this point, it's a little bit more balanced, but I'm probably still slightly more over versus under. Well, we're not going back to 60, 70, 80 anytime soon. Now, if you look out at the futures market, the market's telling you we eventually settle out at around $75 a barrel. That's where the December, January futures contract is right now. We'll see how that plays out. But the one thing I'd point out is on the equities, I think the valuations here, the way we look at them, the valuations are reflecting somewhere around $65, $70 oil. So I think if we're at $75 oil long term, that the equities are still cheap. And so I'm not selling anything. I've said this all along. I'm not writing any covered calls. I'm not selling anything. I'm sticking with the names that I own here. And, if you said, well, gee, what if I don't own anything or I want to add some energy? I'm itching, to go more overweight. The one name that obviously has got still momentum here is Cheniere LNG, just because, as probably most have seen in the headlines, the recent attacks on Qatar's LNG facilities, they came out and said, well, there's about 15% of our capacity that we can't repair, bring back online for 5 years. So the more of that LNG capacity in Qatar that comes offline or is delayed and coming back online is a benefit to the U.S. LNG producer, Cheniere being, the obvious one at the top of the list. So, I'm holding on all the names. If you're saying, look, I want to add somebody, I'm itching to add an energy name here, Cheniere, and I know it's up like 4% this morning, but that's the obvious name that is going to continue to benefit from what's happened here in the past few days.
And I would add, if you want a little more speculative, Nexta and Venture Global both are literally going vertical. They're a little bit more upstarty versions of US LNG. I think Venture Global was a early 24 IPO out of Goldman, or maybe 25. I can't remember. Maybe it was 25. But those things have really gotten off their butt here, and I think that I've heard arguments that part of the strategy of this war that's not talked about publicly is you want that Qatari LNG? How about the US LNG? Because we both have a lot of trains coming online. Starting last year through about 28, Bob. There's a big amount of supply coming online, and market share in energy is a little dirtier business than retail, Jeff. Sometimes they get into the war game.
There was some concern that we would have overcapacity of LNG export facilities in that.
That was a huge short thesis for sure on that gas in like the 27 part of the curve.
Yeah, and so that's pretty much out the window if you've got some of this Qatari capacity offline through that period.
So in the softer perspective, what can go right? It's this has been just a clown show pretty much from the jump. They've ignored the U.S. history of regime change efforts, not a super glorious past in that. They can't ignore the fact that no presidency has really been able to withstand, at least in the midterm basis, gas prices that are going parabolic. And so at some point, they're going to pull out the stops to try to reverse this. They can't have the rate of change anyway. If they get it back to 75, you're at least having a conversation. But what can go right in terms of driving oil down? There don't seem to be any quick fixes. What isn't anyone thinking about just yet that could happen?
It could happen, and it's not likely, but Trump met with all the heads of the oil companies in the U.S. And remember, these companies have been very strict the past 4 or 5 years in basically maintaining production, returning all excess cash flow to investors or shareholders. Can he twist their arm and say, you know what, ramp it up, start to grow your production? Can we add 1 million barrels a day of production in the Permian Basin in a short time period? Yeah, we could. Physically, we could. We drilled these wells in like less than a week. How quickly they can drill horizontal wells in the Permian is amazing. So what could go right? And I'm not saying this is the base case or the likely case, but you said, what could go right? Could the administration incentivize or twist the arm of the Chevrons and Exxons and everybody to go into the Permian and ramp up their activity to, in 6 months, could you add 1 million barrels a day out of the Permian? Yeah, possibly. You could. It's conceivable if you just, put the accelerator to the floor and call in all these rig companies and service companies and add rigs and say, look, we're just going to start drilling these wells like crazy and increase our production out of the Permian. In 6 months, could you add 1 million barrels a day? Possibly. That's sort of the upside case. What could go right to really add the supply, the upside scenario, at the same time that they get control of the Strait of Hormuz and they're able to allow shipments through the Strait of Hormuz. At some point, that's got to give. At some point, that's got to happen, because at some point, I would think that Iran would run out of fire capacity. At some when and that is, I don't know, but at some point, and does that entail Israel or somebody putting boots on the ground? I don't know. But in the meantime, you've still got the risk of blowing up those pipelines on Karg Island that deliver all that crude from Iran in the cargo ships that then can sail out of Iran. You know, that's always a risk. It's something that could happen. And that's one thing that Trump's administration is trying to do right now. They're saying, okay, we're at war, but let's not shoot each other's oil facilities. Let's just sort of leave those, off the map and be nice when it comes to oil facilities. But, this is war, and there are no rules at the end of the day.
Yeah, I was talking to a guy who was a big CIO at a hedge fund, and they had kind of gotten the word from the Trump administration that they wanted to get this thing off ramped in the next 10 days or so. But again, I think it's like, last year the liberation thing was totally in his control. It was his administration's idea. They put Lutnick in the closet, and they brought Besson out. And, if you saw on Sunday, they tried to put Besson on Sunday's show. That's like the adult in the room kind of guy. But again, as a guy who was in Dubai when the war started, I had that insight of like, hey, we can do through a few drones, we can do a few missiles, and the asymmetry of the situation is just not in our favor. And, I've heard that the Karg Island thing, like, man, maybe we take that and try and cripple them because that's such a large percentage of their revenue. But again, what does that do to oil? How much pain has to be? I think that's what we're going through. It's like, how much pain? Who can take the most pain, basically? Mm-hmm. And, in a big pain orgy that we're in right now, it's not exactly the most fun thing, is it, Jeff?
No, it's every crisis has this in common, where you kind of struggle through the day, you go to bed, and you wake up just to see what they screwed up overnight. What hell basket has been unleashed. Oh, they bombed the natural gas facility. What the hell? Like just stuff that just is not really in the playing field. To Bob's point, we started a war. Now we're trying to make rules. It's you don't punch a guy in the face 10 times and then say, okay, let's just cool things down a little bit here. Let's just, let's just relax a little bit. We've taken out a lot of top leaders, and there isn't a lot of regime change hope. And I don't know who we have kind of in the on deck circle to even take that over. So it's a situation, again, it's what these crises all have in common. Even though the tariffs were under our control, it seemed like, it was a bad news every day thing. The Liberation Day kind of unveil of, this is going to look like 40% tariffs on everybody. That lives on in history is one of the great unforced errors, but also just crazy town. Can they back away from it? The question this time is, can you get the other side to back away from it? Because they don't seem to want to, and they don't seem to be running low on drones just yet. We're assuming that there's a finite kind of amount of supply that they have. There probably is, but again, it doesn't seem to be a problem for them at this point.
Yeah, and remember, the current regime structure doesn't want a truce. Again, this is a religious.
Why would they possibly? We've ticked them off. We smashed a hornet's nest with a couple axe handles. I don't expect them to want a truce ever.
Right. They don't want a truce. They want a truce ever. And if there's a regime change, there are still millions of people over there that are on the side of the current regime that are going to cause trouble under a new regime that's not of their liking. It's not going to be a peaceful, if there is regime change, it's not going to be a peaceful, easy go about it, because there are still millions of people that align with what is the current regime that are going to cause disruption.
Yeah, and right. I guess if you think about it, like if from their standpoint, where clearly they can't go battle like Rommel versus Patton style out in the open field with the U.S., but in this strategy, they can inflict enough pain in financial market, like Dubai. People, they pull money out. Where they're gonna, the piggy bank is. I don't know if you guys saw gold yesterday, but gold down 5 or 6% tells me someone was using that because they needed some money. You know what I mean? Like, and then you think about, well, the S&P, that seems like a good piggy bank. It's had a hell of a run, and there's so much foreign assets in here. And so the longer that goes, the closer we get to November and the midterms. And now Trump's coming out and saying, "Oh, I need $200 billion for this." Well, if you were a congressman in the GOP who maybe wanted to start distancing himself from the Trump administration, that will be a good tell. Hey, man, we're not sure. This is your war, buddy. And so there's just a lot of things. This is not a good time because all these rallies get faded. It's not going down fast enough that people's hedges. Now we'll see. Today's option expiration day, so there's a lot of people who had option. And if you remember last year, Liberation Day, we sold a little bit from February into mid-March, hung in there, and then the hammer went down. And that's often what happens because when you're hedged, you don't care. But now cost of hedging is expensive. And it's like basically a situation where credit's going the wrong way, rates are going the wrong way, oil's going the wrong way, and volatility's elevated, but it's not too much that, you kind of get that capitulation. So that was very similar to 22. So I like to think of this as the Max Payne market.
Yeah, and who does this benefit? Remember, there were reports the other day that Russia was providing intelligence to Iran on their efforts to, counterattack and do what they've been doing. And who benefits? Russia. If Russia can keep this chaos going, and maybe they're giving them intelligence, maybe they're sort of, shipping them some drones under the table there, because in the meantime, they're getting a higher price for the oil that now there's been sanctions lifted so that they can sell it. So, when you think about who benefits from this, continuing and sort of could kind of help, fuel the fire, it's Russia. I'm not saying that's what they're doing, but there were reports they were providing intelligence. They're the ones that sold them a lot of their drones initially. And they're the ones, if they keep doing it and, try and keep this going, they benefit from not having sanctions on their oil and getting a higher oil price. So, just something.
Honest to God, the administration running a Vietnam playbook was not really on anyone's bingo card right now. Who benefited from fomenting chaos in Vietnam? The communists. They like chaos. The enemies of the U.S. like chaos because kind of the world order favors the incumbents, and that's what we've been for a long time. So super weird that we're doing that. I would think they would back off. It didn't work out well for the Democrats in the 60s. Here comes Nixon. So you have this sort of dyslexic version of let's just out-muscle them, LBJ flopping it out on the table and saying, we're just going to go get him. We're going to hit him harder is what we're going to do. Super strange policy. And to Bob's point, that's not going to bring people into office peacefully. And, you can relabel it terror strikes if you have a regime change, but that's really just semantics. It's going to amount to, there's no reason to think that these strikes go down. There's no sign that, they killed the wrestler. Why did they do that? Because they're just willing to put on that black hat and wear it, and they give zero craps. So, why would Russia kind of not do it? What are we going to do to Russia? Well, we're going to buy oil from them, I guess, and that'll teach them a lesson about doing its underhanded deals. It's crazy.
So I guess that's a good way to end it. We can sit here and the three of us can probably talk for another hour about hypotheticals and what's interesting and get a couple good Jeff Mackey jokes along the way. But the reality is that there's a lot of uncertainty. This doesn't seem to be the easiest off ramp. The market's had a really nice run. There's a lot of underlying mechanics that are rough. So I just continue to say, look, if you like what you like, roll with it, and otherwise kind of just go and see where stuff is looking cheap or where you're going to be and just sit on your hands a little bit. It's just, I like macro probably more than anybody, but this is not like I'm not trading a ton because it's just, look at yesterday. We had Netanyahu says this, that we rally 100 points. Then I wake up this morning, boom, faded. Now we're down 120 basis points again. And there's going to be a point where we can't rally. I'll end it like this. It's like every day we wake up and someone punches you in the face. Now you don't die from it, but it hurts. And I feel like this market of down 40 bips, down 60 bips, down. So we're not getting that 5% flush, but it's every day getting hit in the face with the higher pump, with the lower stocks. And it's, we'll see how long people can make it last. So anyway, let's call it there. I'm Benjamin Bry. These are my buddies, Bob Morris, Jeff Mackey. This is Wall Street Beats. We will be back next week. Take care.